1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you.
Yo, good morning, everybody. Good morning, Tony. Good morning, George. Hope you guys are doing well. It's almost Christmas, guys. Merry Christmas to those that celebrate Christmas. It's definitely my favorite part of the year. But yeah, hopefully you guys have had a good weekend. We're just going to get right into it, okay? So, very interesting how we've had an FOMC speaker basically talk about some stuff today, 3 a.m. I'm not sure where they're having this meeting at 3 a.m. Oh, I get Cleveland. It's closer to the East Coast? Maybe it was like super early, like maybe 7 a.m. Eastern. Vote on where to set the nation's key interest rates. Yeah, well, they had some type of meeting, so not too sure what it was all about. Obviously, it had to do with FOMC, but who cares about the details, though, right? We just need to know if they have a news event. But yeah, so Monday, there's no trading. It's almost Christmas, right? Christmas is on Thursday. We're not necessarily going to be too active in terms of engagement this week. Big money is on the sideline. If you had millions of dollars, you'd be on the sideline. You would be away from the chart. Probably the last thing you'd be trying to do is engage. Well, maybe some people would, but I know that's my perspective, and many others that actively trade all year. So yeah, with that being said, Monday is going to be expectation of, high resistance. The whole week, in my opinion, is going to be low probability. There is news, and there will probably be something that goes against that statement that takes place, which, there always is something to do. And if you stare at the chart long enough, you'll find something to do. Whether it's profitable or not, obviously, it's to be debated. But, so the key element for this week is to just relax. The rest of the year, relax, right? Don't push too hard. Don't try to pass funded accounts, right? Like don't have the perspective like this week is going to be the game changer week, because it's more likely that it's not. And you'll probably make a mistake. We'll probably get caught in low volume type of delivery. It's holiday delivery. The day before, day of, and the day after a holiday is generally low probability also, because holiday volume is in the market, and then it slowly comes back into the market. We are inside of the first quarter of next year. The rollover has taken place. And yeah, we've had a lot of ADP, employment data. We've had like FOMC, CPI. I mean, we had 2 NFP announcements this month, which is strange. But I think it's because of the shutdown. They're trying to catch up. So yeah, with that being said, first and foremost, the thing you got to think about when you look at the news, as always, just a reminder, is power three. All right. Sunday, Monday, generally accumulation, manipulation. Sometimes Monday sets the low or the high of the week. Generally, 70% of the time it doesn't. Tuesday, Wednesday is expansion, generally. And then Thursday, Friday, if we hit a significant liquidity pool or tap into an opposing PD array, if it's going higher, say it hits a bearish order block. If it's going lower, going into Thursday or Friday, say it hits a bullish order block, right? Or a fair value gap or takes out a low from previous week. In those instances, you should look at the last 3 days because that is basically the grounds for TGIF. And, Sunday, Monday, it's the initial part of the weekly candle. Tuesday, Wednesday, largest lion's portion of the weekly range. And then Thursday, Friday creates generally the wick of the weekly candle and then comes back into the range, causing the close to be inside of the range of that week, right? Basically encapsulating that whole weekly candle. So when you look at the news, the first thing you got to think about is that what could the news be telling us about the possible profile, the possible behaviors that could be taking place in the market as these news events hit the market. Okay. And again, we're in November, December type of, characterizations or parts of the year or seasonally. So yes, there's a Christmas rally. Yes, there's sometimes a flurry of buy-side delivery because of all the commerce, but it's not like that means it's going to go forever until next year, right? Like we've had a pretty solid flurry of buy-side delivery this month, right? It's went up and down, but and we'll get into the chart obviously in a second. But I hope that this makes sense. We talk about this every week. The first thing you should be anticipating me to talk about is the news and how that's going to basically look or what it's going to promote inside that weekly range for power three, right? So that's the very first thing you need to be doing. And Merry Christmas, George. You're welcome, Harley. Appreciate you hopping on, brother. So hopefully that makes sense. We've been talking about this all year. I do the same thing every week, and you guys have seen how effective it's been. So yeah, hopefully you take it to heart. And starting next year, well, next year's already started for me, which is, the first quarter literally just began for next year. But hopefully next year you guys took away from this year enough information on this YouTube channel to have a process for many, many things, especially the week, like the beginning of the week, right? The weekly prep and what you should be paying attention to, okay? So yeah, if we move over here to the yields, just move something real quick. Or the bonds here, let me actually pull up the yields too. So a big thing that we're going to be doing today is really paying attention to the quarterly chart and the monthly chart because, we got to start making preparations for what the year is going to begin doing. Like last year, it opened up, consolidated, had SMT at the highs for the indices and completely sunk off the heels of tariff announcements. So, of course, we're going to be paying attention to all the early news events that take place. And I think midterms are next year, too. So it's going to be a pretty reckless portion of time because it's going to get vicious if it hasn't been vicious enough in politics in the United States. But it's about to be vicious again. And people are going to be saying a lot of things. It's going to be a lot of chaos that takes place. I've been hearing that the UK is trying to sell off U.S. treasuries to damage the United States economy as a bribe or threat to make Trump continue to fund the Ukraine war and not come to an agreement. So that is a huge story that we as traders need to really be paying attention to. But that's what's happening. And it's not only the UK, but it's NATO in general. So there's huge pressure and threats against Trump to basically tank our economy, tank US assets in the stock market by selling up to $2 trillion of government treasuries that they hold, US debt basically, right? So if that happens, if they do decide to be brazen like that, hopefully they all get what they deserve, first of all, because that's pathetic, just because peace is, trying to be achieved. And some people don't want it to end because they make a lot of money in government contracts and military spending. But if that happens, we got to be really aware of that. I've heard this story like 2 months ago, and I didn't really hear nothing about it. But yesterday, I heard Tulsi Gabbard, our director of national intelligence or something like that, come onto a stage and basically blurted this out in front of everybody. So, yeah, it's still active, and there's still threats that are trying to sabotage peace in the world. And it's specifically threatening to tank the US economy. So much for allies, right? But yeah, if that does happen, we got to be ready. And you don't want to be in a trade if that happens. So we're going to start the year off with our risk cut as we generally do, slow and steady. But you got to keep your ears to this story. I don't give a shit about anything else. I don't care about all these social issues. You got to be concerned about that. Okay. Anything you see on the internet or on the news about this and that, this person fighting, that person fighting, who cares? What's truly important for us as traders, especially those of you in the United States or in Britain, or in just the UK, Britain, isn't it the same thing, I think? But in these parts of the world, and if we're trading these assets, we need to really pay attention, because you don't want to get caught offside if they all of a sudden announce that they just initiated sales like that on U.S. treasuries and then get caught up in a God candle going to the downside, blowing all your accounts, maybe if you're in a personal account, making you go into debt, because that will not be respected. Okay. So let's pray that, people come to their senses and relax. But that is something that I wanted to make sure that I mentioned today on this call for those of you that follow me a lot, and especially those of you who actively trade like real, and make real money. It's very volatile going into next year. So, hopefully in the spirit of Christmas, people chill out and actually want peace. Because what's the point in all this stuff if the whole world's going to blow up because they want to drag us into war? War is good. Weird statement, but war is good for volatility. But it's not good for lives, and economies. So join me in praying for our countries and basically praying that cooler heads prevail. But yeah, so with that out the way, looking at the bonds here, let me move that over there. Let's start with the yields. So I did mention this eyeball. Okay, I put this eyeball up there last week. And the week before that, when we were down in here, I said if we were to overtake this and get above this, we'd probably try to target the rest of the fair value gap. So I was correct on that again. Even at the end of the year, we're still knocking things out the park accurately. Just shows proof of concept and how these concepts are unrivaled. But now that we're above this weekly bullish order block, if you move up in time frame, go to the 3-week, you can see it's a weekly order block. I just didn't put 3-week. It's basically a week, right? Weekly. But we're above that. We've seen the wick in here. That's a beautiful sign that this order block is holding. I'm not necessarily sure if we're going to be able to get up here. I'm sure that we're not going to get up here by the end of the year. Maybe next year, if we do get up there, something that would be a real issue is if what I just mentioned takes place, because it could run up here and then slam lower as a result. And then, I think pretty much all U.S. assets would tank if economic terrorism from these so-called allies is applied to the U.S. economy, because that's literally economic terrorism, if you ask me. What kind of threat is that to a people? So yeah, again, what we're seeing here, there's a failure to break this. So 50% respected, and we got a change in state of delivery. So, and then a potential overlap of this weekly fair value gap in here. So as long, excuse me, I think I'm getting sick, guys. Sorry. I haven't feel like I'm getting sick for like a week, and I'm not fully sick, but I don't know. My throat has definitely been messed up. But yeah, the order block here, the swing low down here I talked about as price was breaching this with my private group. If we were to slam below this, that would be enough for us to obviously invalidate. You can see the buy side invalidation I labeled here. And yeah, it's pretty much went close to the target that we had. It's pretty much the target, right? I just had like extension levels mapped out. And then we have the high up here and the trend line liquidity. So we will continue to monitor how this is going to behave. But if this is going to keep going higher, it's going to have to stay above this fair value gap, because overtaking that fair value gap, getting up above it and then coming back into it, if it's going to go higher, it'll treat it as a BPR, okay, which is a balanced price range. And of course, if it was to break down below that and then basically, violate this low, get below this monthly fair value gap especially, that would set the stage for us to really, really take a nosedive and target this level down here. But before that, right, we have to obviously look at the liquidity pools that are most important to us right now. That is the current and previous weekly candle, and any weekly high or weekly low from any of these candles that is in close proximity to where price is currently at. So that's how you pick the most near-term liquidity. That's the most important. And yeah, like I said, we have the trendline liquidity. And as long as it stays above these levels, we should be able to continue to see this go higher. And that, of course, should be a positive sign for the US dollar. There's lots of stuff going on. There's been lots of heavy crack and correlation between the bonds yields and the assets they impact since November. It's been scattered throughout the whole year. There's been pretty cracked in correlation type of behavior, but more so, which was anticipated. I did mention this in November that, before we headed into November, December, and January have a very high likelihood of cracks in correlation. And when there's a crack in correlation, what is like the market relationships role in bias and narrative, right? Or what is its role in gauging high probability or low probability? Is it the first? Is it like the last? Is it one of the most important? Is it not important? Let me know in the chat, you guys. Based on what we've always talked about for basically the year and the last 3 years, for those of you that are in my private group, how important is market symmetry to high probability or low probability identification? Just toss your thoughts in the chat. Yeah, Tony said life-changing. I appreciate you saying that, brother. I'm grateful that you feel that way. Yeah, low probability. So when there's a lack of symmetry in the marketplace, that's the first identifier to high probability or low probability. And if they're all symmetrical and everything's moving in a healthy manner, yeah, it's very important, Roger, exactly. It's the first thing you need to consider. That's why we start at the very, very first asset being the bonds and yields, because these indicate or dictate or heavily influence what the other assets are going to do. So we have to start here. because it's that important. And we talk about it all the time. There's a lot of people that say, oh, just jump to NASDAQ. But that's not what I do. Okay. And I'm not here to cater to laziness. Okay. It's just kind of the way it is. But it's super, super important. People ask me all the time, how are you calling the market every week? How? Like, what's the secret? And it's simply just doing this type of work every week. And I should put it on display for everyone to see, at least, to start the week. And when you get down to those lower time frames, this is like one of those key elements, right, to justifying a lower time frame direction. Some people that trade on like those super low time frames and never even go to the higher time frame, that's their prerogative. And some people stick to that way of doing things. I personally don't believe that it should be disregarded in terms of the higher time frames, because they do nothing but help you on those lower time frames. But market symmetry is the first thing we're observing, and the way we get to an accurate observation of that is by doing deep analysis on all these different assets. And it's not too many assets, like a handful. Bonds, yields, GBP, USD, Euro, USD, DXY, the 3 indices. I'll be talking about gold a lot next year. Talked about it a little bit this year. I took one trade, made $4,000, which I showed. But I'll probably incorporate gold a lot, because like what I started this call out with, things may heat up dramatically next year. Okay. So we gotta definitely see what the impact's going to be. And I know for a fact the war in Russia has been great for gold, for certain assets, for certain companies, military contracts, and military companies. But I think gold can go to 10,000. I'm sticking to that prediction the next 3 to 5 years, maybe sooner. Like if what I mentioned at the beginning of this call happens, gold is going to absolutely go bonkers. Literally, it's already going insane. It's outperformed pretty much every asset, except crypto. Well, even crypto. Crypto hasn't had like 1,000+% returns this year. Some coins have. Some companies have, like XRP, which I'm heavily part of the XRP army. But I think gold still has a ways to go. It's been held down for literally decades. Since we got off the gold standard in the U.S., which was the stupidest idea I've ever seen anybody do. Now that I'm older and understand how money works and what the hell they did to us, just so they could print unlimited amounts of money, they basically gave our financial security to other countries, the petrodollar, right? And what happens when those countries don't want to be our friends anymore? So not necessarily the greatest idea. And if everybody goes back to the gold standard, that'll be another reason it'd be a very painful switch over, but hopefully one day we can get through that and get back to that, because that was real true stability and wealth for every country that was heavy in gold, because it's a real asset. It's not just sales of something that backs up the currency. But hopefully they can rectify all that. But yeah, keep your eyes on gold. We're going to discuss gold in a little bit too, so stick around for that, for those of you that do trade gold. But yeah, so I'm going to just keep this opinion. Let's just take a glance at what the quarterly chart looks like for the yields. We're still inside a bullish order block, still inside another one down here. So yeah, we'll see if that continues to hold. And this is all working inside of this quarterly order block here too. We have lots of trend line liquidity here. It'd be great to see the yields drop down this low, because that means that interest rates are very, very deeply cut. It may take place because there's going to be a new Fed speaker that's going to be placed, or the Fed chair or whatever, for the U.S. Federal Reserve. So that'll be a good thing, because we will rapidly start to cut rates. People will be able to buy homes again. Money will be cheap. The stock market would benefit from that, because the yields would drop, and generally that sends the stock market higher, as long as economic terrorism doesn't take place. that would be pretty much the expectation given the forecast. Aside from that, in terms of the moves that are going to be taken by the government of the U.S. So yeah, keep those things in mind. Why am I mentioning this stuff, right? Why am I? Some people may think like, why aren't we just talking about only the chart? Well, this is part of what it is that we do. As a trader, you need to pay attention to world events, because if you don't know a war is going on, if you don't know some of these certain things are taking place with the U.S. economy, and you trade U.S. assets, like you're uninformed, and that's where dumb money lives. And you don't want to be dumb money. You trade smart money to be smart money, not dumb money. And part of being smart money has to do with being awake to things that may impact the economy with the asset that you're trading or asset classes that you're trading. Okay. So that's why we talk about these things sometimes, and especially right now, especially going into a new year. I knew that tariffs were coming before Trump became president. So as a result, I was able to call the entire like thousands of points down to start the year last year, and then pick the low because I knew he wasn't going to continue to press insane tariffs, because it would have an impact. And he doesn't want that. He don't want his approval rating to sink, right? So it hit a yearly order block for the NASDAQ, set the low, and then we rode it up the whole entire year. And I call bias and narrative every single week accurately, which has been recorded. And part of that has to do with me being aware of what's happening in the world. And, the more wisdom you gain as a trader, the more impactful, or the more aware you're going to have to be, or you're going to feel you have to be, to at least economic news, all these social issues and nonsense that floods people's life. It's a distraction, at least if you're a trader, it's a distraction. You don't have to be a crazy political person or pick one side or the other, but you do have to pay attention to what's going on economically. And the policies of this administration are absolutely amazing for the economy. It's already went from $5 gas prices to about $2. In some places, $1.69 from the previous administration that had us at almost $10 a gallon for gas artificially, because they wanted everyone to have electric cars by force, right? So all that stuff impacts things that happen in the market. So you got to at least have an ear to it, okay? So yeah. And of course, I talk about a lot of the important things, right? I mention stuff when it is going to possibly have an impact. So if you wanted to use, this YouTube channel for that, it's kind of a all-in-one, right? So you don't have to look at the news. I encourage you not to look at the news, honestly, if you don't have to. But yeah. So we'll see what happens with this. I think I'm going to mark this off here. Let's put that there just to keep a reference for it. Go to, where's the quarterly? And this will be about all we really look at on this asset. Not much has really changed. It's just kind of done exactly what I said it was going to do, as usual, right? And that's because of the tools, right? It's not because I'm a genius. It's just because of the tools. They're just so good. They're so good. And it can't be understated. You just need to spend time learning about it. Get around people that know what they're doing. Get around people that can call things before it happens and explain it, right? And there's a good amount of people now that do this, but if they can't even come out live and do this type of stuff, like at least tell you where it's going to go at a minimum, I would unfollow them. But yeah. Yo, what's up, Carlos? Welcome, brother. Appreciate you hopping on. Appreciate all you guys for hopping on. But yeah, so this is pretty much all I'm going to be keeping tabs on here. We got order block here. This order block's inside this one, so this range is more important really than these. This candle got up above this open price, so the 50% of that it should be sensitive. We could see that price is closing above the 50% of that up candle here, and it's really closing above this quarterly bullish order block, so that's very interesting. But if there's going to be rate cuts in the future, which apparently there's going to be many. We'll probably see this take a dive and eventually target this. We'll see if that happens aggressively to start the year, because once a new Fed speaker comes in, Fed chair, whatever, there's going to be drastic changes to monetary policy. So again, another thing that we have to keep tabs on, because it directly affects these markets, which directly affect the assets we trade. Okay. So yeah, this will be all I'm really going to look at. If we go to the 6-month chart, because it is the end of the year, we want to be watching around these different levels, right? We want to be looking around, where are we at? Okay, where's price out on these massive time frames, right? We have the wick in here. It's been respecting these wicks, just gradually going to the buy side. So maybe it chooses to displace up here, maybe takes this out at some point next year, and then maybe it turns around for the second part of the year. Or it just stays consolidated for a while, because that's pretty much what we're inside of. It's accumulating right now. You know, so if we're looking at the higher time frames, that's kind of what we're in. And you could see that translating to the lower time frames. Well, the quarterly, on the monthly, it's a mess. The weekly, right? We see that it's just been a nasty mess all year. So, but yeah, with that being considered, again, we have the trend line liquidity up here. We got relative equal highs above this high, and we're inside of this. So this is going to be very important to watch. Are we going to stay inside of this and then get above it? If it does do that, my attention goes up to these highs. Okay, which is that's something that I'm going to favor until this fair value gap down here gets violated, if it gets violated. Okay. And yeah, and we also have the order block here too, the 3-week order block. So as long as we stay above those levels, it'll continue to gradually go up to the buy side potentially. And again, don't forget that there's rate cuts coming, and that declines this market, because the rate cuts directly affect this rate here, 4%, right? Almost 5% still, right? So if there's like a half basis point cut, it's going to have a negative impact. It's going to pull this, or a positive impact for us, because, you know, we want lower interest rates, because that means higher stock market, you know? So, you know, and people buy homes and all that, so it's beneficial across the board, not only for us as traders. So yeah, keep that in mind, and these are some of the things that I'm going to be keeping tabs on. And yeah, it's very similar across the board, really. Yeah, all the lows swept out these areas. There was SMT here, if you see. This low here was higher than this one, but there's lower lows over here. So yeah, like right here. So yeah, that's pretty much going to be it for this asset. And we will be moving on now to the bonds. So if that's initially going to end up going higher, like we talked about, this breaker should be impactful and send price lower in this asset. That's generally a lower interest, right, for the indices. When the bonds drop, it has a direct impact on foreign currencies and the indices as a whole. So if this continues, we may see more of that in the indices and the foreign currencies, and probably potentially higher interest in the dollar. Plus, you got the holidays and all that, so lots of economic movement taking place. And with gas prices being $1.60 in some places, coming off of like $5 a gallon, I'm sure that's going to save people a lot of money to spend on other things. So yeah. So if we go to the weekly chart on this asset, I did mention this breaker here. I said that if it was to stay below that, it'll probably keep going lower. I said if it was to invert this fair value gap, which it has done, as long as it stays below this area, right, this candle, preferably below the 50% and below the 50% of this inversion fair value gap, it should be able to keep going lower. We are inside this monthly bullish order block, right, from this high to that low. This is the monthly bullish order block. Let me show you that. right there. And now we're kind of resting at the 50% level of that. So it's kind of having a reaction, or it had a reaction. It dropped a little bit, but once it hit that, it's responded. This is a good example of finding opposing PD arrays. If you're bearish and you're trading into a bullish PD array, it's going to trigger in some type of retracement response, like a speed bump. Right? ICT classifies it like that. I classify it like that because it does just that, right? It acts, as like a speed bump. Doesn't mean it's going to fully turn around, but if you do like counter trend trading, and that is something that you want to be good at because you just can't follow the trend for whatever reason, this is a great way to do that, right? For those that are maybe contrarian, there's nothing wrong with that. You just have to kind of understand how to navigate that. I have a friend named Byron who's in my private group, and he's really good at doing that as well. So he's a spectacular trader, and he, a lot of times counter trend trades. So there's evidence of that being something you can do effectively. And this is one way that you can build a model around that type of perspective. It doesn't matter if you're going bullish or bearish. If you're bullish and you hit a opposing PD array, like this order block here, price is, more than likely to give a retracement of some kind, even if it's going to continue, right? And what did it do? It hit the opposing PD array, went down to a fair value gap, right? And then started rallying again. But all of this down movement could be traded off the heels of, a run on stops here, order block being respected, and then it simply came off of a rally that then retraced for a particular internal range liquidity pool or PD array, right? And then change in state of delivery, and then we started the march back up to the buy side. So if this was a different asset, I'd be saying the same things. It's all the same. It's all universal. Everything that we talk about on every asset is the same for every asset if these elements are in place, because that's just how it is. Like I always say too, guys, don't forget that the most recent liquidity from the current high and low of the weekly or monthly candle or whatever higher time frame you're on, and then the previous higher time frame candle, that high and low, those are your near-term liquidity pools. And any PD arrays that are in close proximity, like I would say this is close to this. I would say this breaker is close to this. This is a little much. This is a little much. Okay, it's a little bit too far to be focused on right now. It may gravitate, if it was going bullish, it's going to gravitate up there, obviously, eventually. But we want to make sure we're identifying near-term liquidity, near-term PD arrays that are going to be responsive for the next weekly candle. And it's the same for the daily candles as well, right? If you go to the daily chart, the last like 5 daily candles, if they're close to where price is at, which generally they are, both on the buy side and the sell side, they're definitely going to be things that could be a target or counterparty liquidity. Okay, and then of course the close proximity PD arrays on the daily chart, in this case would be the wick. Right, we got an up candle here. If it trades below that, that'll be an order block. We have a bullish order block here. We have volume imbalance. We have new week opening gap in here. And then, of course, all of that is encapsulated in these higher time frame levels I mentioned. Okay. So again, if the yields are going to go higher, if they continue this rage higher, then this is going to have downward interest to want to target the wick quadrants in here, because wicks act like gaps. Okay. So yeah, with that being said, hopefully that makes sense. Got this weekly, is that the weekly bearish order block? Let's look and see. Yeah, so that was the weekly bullish order block, so I got invalidated from the other week. So yeah, so hopefully that makes sense. Let me know if you guys have any questions, of course. Bonds are not one of those. Control the market. Yeah, Zamba, I have no idea what you're talking about. He mentions continuously bonds and yields. I'm not sure if you've been through his mentorship, but I have, and that statement is inaccurate. So sorry to tell you. Bonds and yields are part of that, right? Besides the most liquid and highly controlled markets by market makers, bonds are not one of those. Yeah, yes, they are. Absolutely. So that statement is incorrect. And if you go listen to ICT's mentorship, go through the whole content, excluding his commentaries, which he's also dove deeply into all these concepts and how all of these things work exactly the same. It's all affected in a very similar way. You'll see that he does mention bonds and yields are part of that highly manipulated basket of markets. Okay. And they're some of the most important as well. And it's all universal. It works with these as well. But yeah, so hopefully that clears that up. But yeah, so that is my opinion for the bonds and yields. So if we come over here to the GBP USD and Euro USD, as we've been talking about for the last couple of weeks, once we got up above this inversion fair value gap, all of our targets have been absolutely smacked, okay, as has been the case all year because our process is impeccable, which again has been proven for years now. And now prices coming back into this weekly, I think it's like a 2-week, 3-week, 3-week bullish order block. And as long as we stay above this, we should be able to continue to see this run to the buy side. Again, we have the bonds dropping. So if we stay below these levels and target these levels down here, price is going to potentially turn at some point. But you can see, like I anticipated going into November, right? The Kraken correlation likelihood is very, very intense going into this part of the year. And it happens every year. If you go back and look and go, dig through all the assets that we talk about continuously, you'll end up seeing that the Kraken correlations are heavy towards the end of the year. And that's because smart money is on the sidelines. They're not necessarily concerned with trying to participate, right? So the volume, right? There's no volume, but let's just say the volume dies out because the big players move to the sidelines. So, yeah. With that being said, it doesn't seem like that's, going to really change anytime soon. So, and this is the start of the new quarter, right? We're in the first quarter of the next year already. So again, if you guys haven't changed your contract months, definitely make sure you go ahead and do that. But if you trade the continuous contract, obviously you don't got to worry about it. But yeah, so quarterly, there's a power of 3. Okay. There's many things that, obviously happen all across the different time frames. Everything is universal, right? So power 3 is not an exception. It's one of those things. So whether you're on the yearly chart, quarterly chart, monthly chart, minute chart, this power of 3 taking place. Of course, the lower time frames are working within the higher time frame delivery, but they all have their own little storyline based on these concepts, right? Of power of 3, market maker models, everything that he talks about is fractal, right? So yeah, we got to keep attention on the bonds and the yields, see what happens and whether that's going to have an impact. We've kind of put them to the side in terms of the relationships impacting the assets that we look to engage. So, I don't think I'm going to really change that opinion until things get back in line. But the bonds and yields are kind of just, doing what they want to do while the other assets are, doing what they want to do. Okay. So in terms of where I think the currencies will go, let me actually go pull up the DXY. Yeah, and the DXY definitely smashed all of our targets too from the other week. And then, of course, that response from that quarterly fair value gap I mentioned on the DXY, it basically smacked up too. So we see that DXY is rallying, and so are the other currencies. Okay, so again, there's Kraken correlation. What kind of condition does that put us in? That puts us in low probability. Okay, just right off the top, you're in a harder to trade, low probability condition. Does that mean you can't take a trade? No. Does that mean you can't, make a justifiable, profitable decision at some point? It doesn't mean that. Those of you in my private group, those of you that spend a lot of time here on the YouTube channel, you guys see we've traded pretty much every single condition and we found something. Did we engage every single one of those events? No. I'm very disciplined. I stay away from conditions that I don't necessarily like or don't feel that I have to be a participant in. But that doesn't stop us from calling the market to the tick, right? And so, yeah, I encourage you guys to remember that you don't have to trade every day. Like ICT says, trading every day or day trading is not everyday trading. The people that trade every day must engage every day. They're very similar to, this may be harsh, but it's very similar to a drug addict, right? Like you got to get that dopamine hit, or you feel like you're not doing something correctly. And that's infancy as a trader. I know I used to be that way. I know all of us at some point were that way, feeling like we have to trade every day, over trading, over leveraging, doing these things. But, hopefully you guys have seen that we could literally hop on the chart every day and figure out something to trade because of the process. It's very organized. It's very detailed. It works out, right? It's very, very lucid, very flexible. So there's always something to do. So with that statement, hopefully, and your experience, seeing what ICT's shared and also what I've shared and, some of the other titans in the industry, hopefully you have that peace of mind knowing that you don't have to trade every day, and if there's a tug of war going on inside of you because you're deciding that, you don't feel comfortable today, maybe you're sick, maybe something happened in your personal life and you have to sit away from the chart. I don't want you guys to feel like, there's like a demand for you to take a trade every day. I'm very active, especially in my private group. I'm on every single day. I don't think I've missed one day this year. Maybe I missed one day, but we're active every day and we find something every day, but I don't trade every day, right? I only pick the best of the best setups. I have very rigid rules that I try to push on you guys, at least to consider, because I can't shove you into a mold, right? You have to be able to use the tools in your own way. And I encourage you guys to do that. I try to get you guys to do that. And many of you do that, right? But you want to definitely consider the risk management protocols that I talk about, especially right now as we get prepared for the new year. If you have any mistakes that you've made, you want to make sure that you're looking to rectify those mistakes and get them improved upon. I'm always open to going back and forth with any of you. Especially if you support the channel, if you support the content. And of course, those are my private group. It's kind of a given. I'm there with you guys every step of the way. And it's my pleasure to do so. But yeah, if you guys have any struggles or anything, and you're maybe having a hard time getting through it, trying to figure out solutions, again, remember that this community is here literally to help. It's not here to throw shade on nobody. It's not here to be pompous and arrogant. It's not here to show off or do any of these things. The only reason that I'm not doing this on my own privately like I used to is because I want to help and I know the impact that it has, and the impact that it's already had on you guys, and I'm grateful you guys gave me the opportunity to play a small role in your journey as you look to become excellent in your skill set as a trader. So just remember that you always have support from me. And don't be too hard on yourself. Map out the problems that you've had this year. Map out when you've done things incorrectly, and go ahead and bounce them off of me. If you see anyone in the chat, that follows the community that's on all the time, for the most part, everybody is helpful. And I'm sure if you reach out with a question, people would want to have dialogue with you. But if anything, I'm always open to helping any of you guys, whether you're a trader that's had 1 year experience or if you've had 10 years. I have age ranges that range from 16 to literally 65. So it doesn't matter how old you are, doesn't matter how much trading you've done. If you feel you're good or you feel you're a bad trader or whatever, there's always a solution to help you improve. And again, I hope that this year I've been able to provide you guys with a lot of those solutions or help you find them on your own, because that honestly is more impressive to me than just taking my advice. I like being able to push you guys into finding things on your own, and because then you could feel confident and happy about the accomplishments that you make. It's not just, oh, this guy did this and that, so it's because of this guy. No, it's because I want it to be because of you. I'm just here to try to provide clarity wherever I can, provide some wisdom from what I've experienced over the last 6.5 years, from being profitable, from blowing accounts, from to growing up from having a hard life to being able to overcome my own demons. You know, and I just wanted from the start to be able to be a resource. And again, I appreciate those of you that have allowed me to be that resource, or be one resource that can shine a light on some of the more positive things, and just the right way of doing things. You know what I mean? How to be organized, how to be disciplined, what to do to try and get yourself to believe in yourself more, how to silence that negative voice, how to overcome family members and friends that may doubt you, all these different things. Hopefully you guys have been able to gain value from here in this community. So yeah. So again, if you guys ever have any issues, especially at this time of the year, let me know, because it's good to have like a solid preparation process, and knock out some of the things that may have been messing you guys up this year. Everything has a solution, so always remember that. But yeah, so if the bonds, like I said, getting back to what we were talking about, if they end up going lower, if the yields go higher, we'll see if the correlation will get back in line. But for now, we're going to keep those things on the sideline for a little bit, as we have been, and just continue to watch the order block here. We're going to continue to watch the wicks, continue to watch the inverted PD arrays that take place. We have an order block here. We'll see if that has a response. This is yet again another example of when there is a counter trend move, or when there's a trending move that hits a counter PD array. It's going to act as a speed bump. If I was the person watching this, I would assume on the outside looking in that this is a pretty solid speed bump reaction, right? It's a rejection candles, right? Little dojis, right? Kind of just rejecting from the 50% of this. And you can see that the respect the bodies are having to this bearish order block here, it's pretty relevant, right? Because we're above this balanced price range in here, which is simply an overlapped fair value gap, I think that it'll be able to hold that. And unless the midpoint of this BPR gets traded through, I'm going to continue to hold that opinion, especially since we came off of this low with an SMT, which we've been talking about for the last couple of weeks. Recorded, by the way. But yeah, pretty much all the targets have been met for this. And the next layer of liquidity I'm looking for is this up here, if this continues. And as long as we stay above the BPR right here, okay? Stay above that 50%. So yeah. And I think that's pretty much all there is for me to discuss on this asset. We do have a gap in here for the Euro futures, so we definitely want to keep tabs on that. We have a gap down here too. It's a very nasty, inefficient delivery in there, so maybe they do look to come down a little bit, work that a little bit more. We do have relative equal highs up here. Okay, so it's left those equal highs. We kind of peaked above some of the highs here, but we also have a next layer, which is up here. So we have a wick in here. So on this daily chart, aside from the higher time frame view, looking at this daily chart, we could see the wick in there. We're going to watch the 50% of that. Order flow is showing us that it's unwilling to even get close to that 50% level. It went there on the wick, but the body closed way above it, right? And then this body never even came close to it. And the wick has stayed above this gap in here too. Actually, let me go show you guys what that gap is. It's the weekly wick, or weekly fair value gap. If I can go find it real quick. Okay. So yeah, again, as long as we stay above these levels, it's going to continue to want to push us to the buy side. And line in the sand overall, at least from that weekly perspective, is going to be this middle portion of this balanced price range. And of course, on this daily chart, if we calculate our if we mention the PD arrays that are in close proximity here, and if price displaces below this low, we'll have to observe how that wick respects price. Again, we have up to this point in price before I start to then think, okay, we're going to drop more. So it has to come down to there. Otherwise, I'm going to keep pushing this higher, looking for the trend line liquidity up here, which in my opinion looks pretty obvious, right? Especially after this huge run. This is a pretty nasty run, right? Just came back, recovered all of that. And now we're above a weekly bullish order block too from that 3-week. So I believe that that's a change in state of delivery. And on this really large time frame here, like the 3-week chart, almost a monthly chart, if we get below the balanced price range there, that 50%, again, that's breaking through the 3-week bullish order block too. So you could see why that would be a pretty significant overall change in sentiment that would then trigger us to then try to target the lower portions, maybe even get down to this down here. We also mentioned, just for completeness sake before we move on, we mentioned this bullish breaker here, right? When price was trading into it, as it traded through it, we targeted and followed this whole move higher and called it. If you go back to some of the recordings around that time, on Sundays, multiple Sundays, we kept continuing to call price higher. And then when it got above this, we mentioned that as long as it stays above this candle here, the 50%, or maximum at the low portion of this breaker candle, it would continue to go higher. And ever since, it's continued to hold that. We've started to kind of contest it here, but still the candles did not close outside of it. The wicks did, but the wicks do the damage, the bodies tell the story. Okay, and you can see the 50% of the wick here, beautifully respected with the body of this candle. So that's a beautiful signature. The price is going to turn. This wick here, obviously in this decline, respected the 50% of that wick. Beautiful, right? And then we had a change in state of delivery, and it just moved a little bit towards these lows, hitting this fair value gap. And now that fair value gap has acted as counterparty to smart money bullish positions. Okay. So again, only if price was to violate this down here would I then switch my opinion to long-term bearishness. For now, we're going to continue to follow the order flow the price is presenting, pushing us up through the buy-side targets, breaking through bearish PD arrays, inverting PD arrays, and continuing to use them as support and little speed bumps, right, as we look to take these levels out. All right, so we'll see if that opinion continues. And of course, if not, we'll make adjustments as we always do if needed. It's not necessarily always needed, but when it is needed, we have a process for that. So you can rest assured that we'll talk about that when the time comes. But yeah, so is there anything else? That was a beautiful weekly wick response, huh? It's like a home run. It's beautiful. But yeah, so that's my opinion on the currencies. So now if we go to DXY, let me... So if we go to the DXY, again, we're having a pretty solid response from the weekly bullish order block. But more importantly, this quarterly fair value gap that we've literally talked about for months, basically the whole year, we talked about this. Initially, we targeted that off the market maker sell model here that I called right in there. We had that balanced price range, price rejected, and we just continued to march lower. We saw these down candles as a bearish breaker. Price traded up into it. In the face of rapid repricing to the buy side, we stuck to our narrative because of things like this breaker, this inverted fair value gap, and we were able to pick that top and continue to target the quarterly fair value gap. Over the years, we called the buys and the sells, right? The buy side of the curve to the monthly fair value gap to the sell side of the curve once it broke this low here. And then we rode it all the way down. In terms of analysis, we don't trade DXY, but we definitely called it, and it's been documented. But it's been pretty spectacular up until this point, right? Because that got a little nasty. Then it kind of opened up a little bit. We were able to also call this run here. Those of you in my private group, you see the model that we used in there. We talked about it. And then, of course, we just continued to push it higher, and it's just been pretty spectacular. And now the high up here, I mentioned as it was moving into that, this was a quarterly bearish fair value gap. If we go to the 3-week chart or the 3-month chart, we could see how that response up there, we highlighted that as a particular area that might push price pretty aggressively, potentially, especially if it was to overlap this fair value gap in here, which it did do. And what happened? We ended up following price continuously to the downside. Just got those old markups. I think I'm going to keep those quarterly levels. Maybe I can remove that because we're not even close anymore. But yeah, so moving on to, this week, given what we have discussed over the last couple of weeks, I do believe that we have to monitor how this is going to behave in here. We may very easily see this turn into a market maker sell model. We have the original consolidation, accumulation, reaccumulation, and then the smart money reversal. So this is, in my opinion, if it does go lower, part of the first stage distribution. And then we'll have the second stage distribution potentially down in this lower level. Okay. So yeah, we'll see how it reacts here. Again, we have this fair value gap in here. You see, is that a monthly fair value gap? Yeah, that's the monthly fair value gap we pointed out last week. So if we were to stay below this, that's enough for us to continue to trust that this is a market maker sell model. And we may look to target the lower level down here. If it does choose to do that, you'd want to take the quarterly fair value gap and put quadrants on it. And then every one of those quadrants, like this, for example, that's 25%. That was used as a target. And then next one would be like the 50%, and then the 75%, and then the full overlap of the quarterly fair value gap. That's assuming that this holds and it pushes it lower for more longer term targets, if it does choose to continue to do so. But again, like I always say, the first candle, the current candle, and the previous 5 candles on the daily chart, or anything that's close, even this one, right? Because that's very close. It could be used. Close proximity PD arrays like this. And then same thing is looked at when we go to, or sit on like the monthly chart, or move on to things like the weekly chart. So we got the weekly high here, marked out the previous week's high. We have the other previous week's high here too. We have another low here. It's also a wick. So that may act as a dynamic resistance level if it stays below this monthly fair value gap. This monthly fair value gap in itself, you want to break down into quadrants. Those different levels, you want to observe them. You don't have to keep all this stuff that I'm mentioning on your chart, but these are just some observations that are in price that you want to be watching for dynamic reactions from, or for targets later on. Okay. So in terms of this, we have the 50% at least of the monthly inversion fair value gap. And if it stays below that, again, that's going to be a reason for us to continue to target sell side. But we'll see right here. Another thing too, if price was to displace on this next weekly candle, come down into this wick, and then fail to really get to that 50%, and then maybe gets above this high here, that would be enough for me to think that we're probably not going to have anything significant to the downside again. And we'd have to then start targeting some of these upper levels, like the wick here, the high. These are weekly highs. So each of those, and then maybe it ends up eventually later in the coming months getting up into this level up here. But for now, price is just simply retracing into an inversion. So we got to see what the reaction is going to be. And if we start to tip over again, like I said, the tactics breaking down the quadrants of higher time frame PD arrays, they could be used as targets. And then of course, any close proximity PD arrays, any close lows from previous days, since this is the daily chart, All of that stuff will be a candidate for a target intraday if we do look to try to target the sell side. Same thing is true if we flip it and go to the buy side, right? My line in the sand, like I said, though, is above this candle. We should not have to return up there. This is also a volume imbalance. If we zoom in a little bit, it's also a little itty bitty volume imbalance. So we'll see if it, maybe is interested in getting up there. I'd prefer that it doesn't do that. I'd prefer that we stay below this here, the wick right there. See, weekly, weekly wick. Oh, why didn't it change? There we go. Oh. So yeah, I'll keep tabs on that and then see kind of how it wants to react. If it gets up there, that would be a possible responsive level to pair up with price potentially going to the downside. Let's see, do we have an order block there? We have this wick too, but we'll just use the weekly wick. We don't have to use these ones. It's close enough, right? So yeah, and we watched for and called for this daily volume imbalance, and you can see that last week went right to it. We had was that Monday, Tuesday low of the week, basically bullish power 3. You could see the candle there. Open, drop lower, came into the 25% of the quarterly fair value gap, and then it just raged to the buy side again. And it's beautiful to see. But blowing past this, again, it's going to make it very important that we make observations here inside this inversion from the monthly chart. Because once it starts trading through that, again, do you really want to force buy positions or buy interest on the DXY if it's doing that, or any other asset if it does that type of stuff? No, right? It's speaking to you. So you want to be able to translate what it's speaking. And that's what we try to do here in this community with pretty high level of success, if you ask me, live, right? So look at that daily chart, 4-hour chart. Let's pull up the monthly real fast. So it's just a mess. So pretty much this is all I'm really focused on inside that monthly perspective. And then of course we have that weekly view. And then we have the daily. We're not going to go to the lower time frames right now. We'll save that for later in the week. And then we'll see what happens, right? But yeah, this is my opinion for the DXY. I want to see if we could hold in here and see if it can decline. If it doesn't hold in there, obviously price will go up. I'm more on the side of price holding in here and then looking to reject and then maybe drop lower. We are inside of a nasty range. So we are inside consolidation. If we go from the high here to the low, and what do you know? We're at equilibrium, right? And those of you that have been with me for a long time hear me talk about this all the time. Equilibrium, if we're sitting in a higher time frame equilibrium, you got to be very cautious because it could be stuck in consolidation. Around equilibrium on higher time frame or in higher time frame ranges, especially in something that's already going sideways, it could present you with tragedy if you try to push too hard. So yeah, so make sure your risk is cut, and we'll be flexible. We'll remain flexible with DXY. I would prefer though to see if this can hold and then try to get us a little bit deeper, but we'll see what happens. We got buy side swept here, sell side swept here. So, because it's the end of the year as well, I don't really think they're going to have any major things take place where, price is going to, get up here or try to target down there. The first quarter is, again, accumulation, manipulation, distribution for the coming year. The first quarter is accumulation, manipulation. The two middle quarters is expansion generally. And then the last quarter, which we've been involved in this quarter, it just passed, but that's generally the cap of the yearly candle, cap of the yearly range. Okay, so going into this first quarter, we got to keep in mind that up until the second quarter begins, we may be experiencing consolidation and manipulation of the yearly power three. So because it's the first quarter, because it's the end of this current year, because price is at equilibrium on the higher time frame for the DXY, my expectations are not too dramatic. I don't think we're going to get up here. I don't think we're going to get up here. We may very well just hang around in this fair value gap. But I'd prefer, if I'm going out on a limb, I'd prefer to see if we can hold this and then try to target the low down there. Okay, see if we can't get deeper. But yeah, we'll see what unfolds. But that's my opinion on DXY. So moving forward, come up here to the beautiful NASDAQ. It's, my stepchild. We can see from this weekly chart, right, we're literally in a very similar scenario, right? We go from this high to that low. Where's price at? Hovering, hanging, closing above, bouncing below equilibrium. Just remove the entries we took. Gonna get rid of some of these extra markups. Oh wait, did I already mark that out? I think I already marked it out, huh? Yeah. See, we were already ahead of it. We already talked about that last week. But yeah, so, we are coming off of a sweep below this. We did talk about this breaker, low, high, lower, low. It failed, so we continued to call buys. Those of you that were here remember, we've been pretty in sync. Prices, came up, hit this order block. We got a volume imbalance. Price then got down back below that. We've hit the bullish order block here. It's also resting at equilibrium, and we're also inside of the 50% of the range, the range-bound environment that we're currently trading within. So again, just like with DXY, I don't really have too crazy expectations. Maybe we get one more potential rally attempt, but if the DXY, it's more likely if the DXY does do what I mentioned and holds here and then displaces targeting this low, we may look to attempt to get through this high, but I'm not going to bank on us making new all-time highs. It's already kind of done a lot, and we're basically at the closing portion, or just fulfilled the closing portion of the fourth quarter of 2025. So, we'll see what it wants to do, but the expectation is not going to be too crazy. But if we're going to go out on a limb and say, where we think price is going to go relative to what's happening, we do got SMT here. We switched through to the Dow. It's got trendline liquidity down below, but we do have that SMT. So that may support, if it does get down there, that's a supportive idea for price to then want to try to dive lower into this liquidity, which has basically came off of a sweep, order block, change in state of delivery, and 50% of the wick held, 50% of the wick held. So it's been nothing but let's go higher for the Dow. The Dow's been pretty spectacular the last couple of weeks. I've had some students smashing it. I don't trade the Dow, and I probably never will. But to those students, you are savages. Okay, and good job. But yeah, if we can get back to the NASDAQ. So it's essentially really all there is to look at here. I mean, you could obviously mention this and that, but that's a little too far at the moment. It could, get to one of those. But this SMT being at equilibrium, my expectation is low probability. We got Christmas next week, low probability. If I do take a trade at all, which I probably won't, it'll be at half risk. We do have a live call on Tuesday next week, so make sure you're here for that. We'll see if there's any opportunities we can call out. Because even if I'm not going to trade, I'll still walk you guys through price like I do with my private group. I think it's very beneficial based on what I've heard, testimonials and whatnot. And just seeing the successes, it definitely shows that what we do here is spectacular, right? So I'm excited to get into things next week with you. But yeah, so that's essentially all I really see here. We have to mark off the current weekly high, previous weekly high and low, or current weekly high and low, previous weekly high and low, and then anything that's in close proximity to where price is at which is, again, these highs up here. We got this regular trading hours gap that I've had my eyes on for literally months. We targeted this whole entire run lower. We knew when it was probably going to turn. Again, it's all recorded. You can go. I encourage you guys to go watch those videos from these times, because there's a lot of information that you could take from it. Lots of lessons and wisdom that not only I gave, but students in the chat who've been succeeding, watching and witnessing this stuff all year, and how systematic it is. I think there's a lot of value you can get from those videos previously. So yeah, that's encouraged. But I think that, if we do end up going higher from this order block, we may look to target this, because we got relative equal highs here too, 3 equal highs. But I'm not too sure. If I was to go out on a limb and say, this is going to go to this level, I would aim here. First and foremost, though, when we open up, my first target is the weekly high from this past week, because it has to break that before it gets up there. It has to break this high and the 50% of this up candle before it gets up there, right? So those are more near-term targets and things that you can look at. We also have the close here. That's something that you can monitor as a target too. ICT says to never lose sight of the most recent open, high, low, and close levels, right? Not only just highs and lows, but the open and the close levels. Those are also dynamic. It's a little nugget most people miss because his videos are very long. But that's something that that stuck with me over the years, and it's definitely true. So yeah, I wouldn't mind if it targets that, but overall my attention is going to be trying to see if we can't gravitate to the buy side. And as you can see, I had a market maker buy model marked off. Let's see if we can go to the 1 hour. We called this entire move higher. It broke through this high up here. Called the market maker buy model there. You got those of you in my private group, you were with me the whole entire time that we called this up. Smashed it last week. And then this here, right? That little move is potentially a smart money reversal inside this larger market maker buy model, okay? Where there's relative equal highs up here as a terminus, right? Accumulation or consolidation, accumulation, reaccumulation, smart money reversal, possible first stage distribution. Maybe we open up, drop a little bit into this this area here, hit that, and then maybe look to target some of this. Definitely look to target this if it does want to go up. And then, of course, eventually we can target these up here as a possibility. This here is also a inefficient level, so that can also be used as a magnet if price does want to get up to this deeper regular trading hours gap level. So yeah, keep that in mind as price prints next week. And I think that's about it for the NASDAQ, what I'm looking at. Let's spend some time here on the daily chart though. So again, we got change in state of delivery. We were talking about this bullish order block here. We did talk about how this was a big decline, broke through many PD arrays. There was a chance if price was to hold in this, the price was going to continue to go lower. But I did mention a conflict that I was having in trusting this going lower was seeing this bullish order block here on the daily chart, 50% be respected and not even traded to. And that suspicion led to, this turnaround and us basically getting in line with the market maker buy model, calling out really good trades to the buy side after price did this massive decline. So you could see how it used that as, again, a speed bump. Even if it doesn't turn around entirely, say it does this retracement and then looks to target down there again, it acted as a speed bump in that case. In this case, though, moving forward, I do believe that, we may look to try to target up here, especially if the DXY does what I mentioned. That's a heavy influence on what I believe the indices are going to do is, that relationship between all the assets, which is called risk on, risk off analysis. And again, that's on full display every single Sunday. I try to get you guys to do it, to understand how it doesn't have to be complicated. There's a lot of different components, but that's because, I have a decent amount of experience, and it's just going to take a little bit of time to catch up. But you spend enough time in a community like this, you spend enough time in the chart yourself, watching the videos and studying what you need to study, uh, you know, giving this the time that it demands, eventually you will arrive. And that's something that you could find solace in if you're struggling right now. And again, if you guys are struggling, going through anything in trading, just let me know. I'm more than happy to be that resource to try to help you guys get through whatever it is that you get through or have to go through, because I've been through it too. You know what I mean? And it's pretty much an impossibility that I'm where I'm at with this skill set, given all the stuff that I've had to go through mentally, stuff that still happens with many things in my personal life. But if I could do it, you could do it. If I can keep my mindset stable, if I can learn how to separate my emotions, at least do my best to do that, because it's never going to be perfect. But if I can get to where I'm at, you can too, and maybe even further, because maybe you have less baggage than some of us that you kind of have to go through. you know so take that as motivation, take that as you know a reminder to not be so hard on yourselves, because it's unnecessary to be really hard on yourself. You have to be the one in your corner if no one else is, especially in this industry, because there's a lot of devils trying to take you away from what's possible in this industry. And there's so much opportunity, too much opportunity to allow any outside forces, to even allow that inner conversation to mess with you and make you stop. Nothing is a valid excuse. If you find enjoyment in doing this, you don't let anything stop you, because you will regret it. You know, because especially if you've tasted it, if people have done well, maybe it doesn't happen super quick for you. This is a lifelong skill set. It's not something that you do and end up stopping a couple years from now. Maybe if you make enough money, possibly, but who can tell the future and see that that's going to be the reality. And most of us, it takes a lot of time, because we got to get through the things that we've been through, and let alone the technicals that we have to learn, and the skill sets internally that we have to develop as a trader. But I encourage you guys to not quit if you find enjoyment in this, because there's no reason. Even if this took you 10 years to learn, and you were able to make like $5,000 a month in 10 years, ask yourself, would you still be interested in this, even if it took you that long? There's a person that is an embodiment of that, that's in the community, the ICT Army, Jade Cat. It took him literally 10 years. He lost his mother. He's had a hard life. So again, if he could do it, if I could do it, who's to say that you can't? And there's just so much evidence that quitting should not be an option, or it's a bad decision. I have people that message me all the time saying, I'm on the brink of quitting. This is why I'm mentioning this right now, because I got a couple messages this week, like basically calling out for help. At least that's how I internalized it. But if you're struggling going through something in this industry, it's not worth quitting. It's definitely not worth taking your own life over. Like it's really not. And you'll get there eventually. It may be hard to see the light at the end of the tunnel, for some people, but trust me, it's there. And you just have to stick around long enough so you can end up seeing it. You know what I mean? So yeah, again, I'm always here if you guys see anything. Hopefully all the stuff that we've talked about in this call has made sense. It was kind of a quicker call. Of course, like I promised, we're going to look at gold too. Let's just take a quick glance at this as well altogether. So going from this high to that low, right? I mentioned this with my private group. This is called grading a price swing. If you find a market maker model, market maker buy, market maker sell model, you get that first leg and you map it from the high to the low, and you get your quadrant levels. And every piece of that range, right, 25, or not every piece, but 25, 50, 75%, you want to make sure you're studying the responses in those levels, right? I'm going to have you go and study that. I'm not going to get too in depth about that, but go in and study that. Study the 25, 50, 75% levels inside of a market maker model that you observe. And this is a fractal idea. It's not only on the daily chart. If you go to the 15-minute and you see a 15-minute market maker model, the same characteristics apply. The same influence, the same impact, the same effectiveness is still there on that lower time frame perspective. Okay, so again, that's a little nugget for you guys to go dig into, and I'd be curious to see your guys' observations. But yeah, so given that, we'll see if this order block can hold. Same thing with this. We'll see if this can hold as well. See how much deeper it can look to get into this. It's definitely more of an equal high type of behavior here on the NASDAQ. I mean, it's intentionally left that, but there is SMT at the highs. Okay, so we do got to keep that in mind. If it does end up breaking down and it does close below the 50% of this order block, that'll set the stage for this low. This low being violated sets the stage for us to come back down to here and beyond, right? But I'm not too sure if that's going to be something viable, at least for now. We got to wait to see what this reaction is going to be from this change in state of delivery on the NASDAQ. Same thing with the S&P. And we definitely want to watch how this volume imbalance with fair value gap overlap, or the inversion, basically fair value gap in here, how that's treated. So far, it looks like it's having a hard time getting through it. So that may instigate a decline in here, but we'll just have to wait and see. If it gets below this, my attention goes directly to that low on the Dow. Okay. So yeah, that is my opinion on the three indices. And as promised, we will come over here to gold, which has been flying and finally hit the full target that we called for when price was down in here. It created a market maker buy model, basically hit the levels that we basically been calling for when I've touched on gold. With how beautiful this has been, that's why I'm saying next year I might incorporate gold as part of my arsenal. I traded gold once this year, and it was pretty nice. And ever since, I've been able to call gold pretty accurately. For those of you that have been here and been present when I've been talking about gold, I said it was going to keep going higher. When it declined, we talked about price not really wanting to go too deeply because of the world events going on, and it looks like that assumption was correct. Let me just change my thing to, oh, what the hell? What the hell is, there it is. Oh yeah, well, when I'm done with doing this analysis, I got some stuff I want to ask you guys, if you'll be gracious enough to give me your time. But yeah, when it comes to gold, it's just rip-roaring to the buy side. We got a wick here. We got a wick here. So the quadrants on this is definitely going to be something that I want to pay attention to. If we break that down, weekly wick. Gap measure. All right, so let's see kind of how it wants to treat this one here. 50%. Grab this real quick. Whoops. I think I'll just leave it at that. Duplicate that real quick. So yeah, we'll see kind of what this wick upper quadrant wants to do. If we stay above this upper quadrant, that's the best case scenario and just keeps going higher. something. Let me. Where is the initial? Trying to see where we can get an extension from. I mean, I guess we could go with the whole range just to get like a rough estimate. It's not like it's gonna 100% go to these levels, but these are definitely going to be levels that I'm going to keep tabs on for gold. You can also take this drop down higher as it got above it. You can also take that, measure it out. That's the standard deviation for that. So that's why that red line is there. Let's see where there's an overlap. Kind of close there, kind of close there. So these price levels, 48.70 to 48.90, that little, what, 20 pips, points? Can't remember what they call gold movements, gold units. Pips or points, or pips, points. I can't remember. If y'all know, definitely let me know. I forgot which one they go by, but yeah, we'll see kind of what that wants to do in regards to that, if it wants to reach up into those levels. But those will be my assumed levels for gold. Just kind of round it up, 44.90 and 4620. Yeah, and if we go to the weekly chart, let's move up, see if we got a wick here, so that's important. Okay, so we'll see if it trades into that. We have the 50% of that 2-week wick. Basically, you could just map it as a weekly wick. We also got the monthly wick, so that's pretty important. Given the fact that this huge wick took place, I mean, it's just been insane gold because of the war. I think 2022 is when Russia and Ukraine went to war, right? If I'm not mistaken. Ironic how it just exploded, just rapidly, parabolic. If you invested in gold, you're doing very well right now. You're doing very well right now. But yeah, so again, because that wick is there, that massive wick, with the overlapping of these imbalances, or not imbalances, but big candles, I guess you could call it just big bullish candles overlap with this. Because it's such a large up-down movement on this wick, buy side and sell sides delivered. I do not think that it's highly likely that they're going to get back to the 50%. Do you notice how it used that 50% of that wick and then expanded? It just kind of highlights the importance of this, because this is going to be classified as a BPR, that whole entire range. So it's unlikely, since price got up above that, it's pretty unlikely that we'll even try to come back down into this, if it's going to keep going, obviously. If it breaks back down through that, then we may be in for a little bit of a deeper correction. But I'm going to assume that this will probably not stop, because I don't think the war is ending anytime soon. Hopefully it does. Like I mentioned at the start of this video, hopefully it does. Hopefully it ends, because there's definitely malicious actors trying to mess up the positive stuff in the United States, and sucking us into a war is a tool in their toolkit. But hopefully it stops. Hopefully gold ends up coming all the way back down to there. I don't even think that's going to ever happen, though. Gold's just getting bought more and more, so it's just going to keep increasing. It should be well above what it's already at. It's been held for decades because of the petrodollar. But we'll see what happens. Okay. So yeah, I wouldn't be surprised if we use these levels as support and just keep going to the buy side. Maybe it runs this and digs a little bit deeper, but like I said, this high to that low, once we got above it, the 50% of this should not be taken out. If it does look to decline and get kind of aggressive, we do have equal lows down there. which we'll adjust to if needed. We got a stop run there, led to the rally. It's kind of a nasty delivery in there at the moment. So yeah, we'll keep this wick, these red lines too, and but specifically this wick 50% level. We'll see how that wants to be treated and see if it can't keep doing what it's doing, pushing price higher. Once we get up above this wick, we'll do the same thing with that and just keep stair stepping using up wick 50% levels and even down wick 50% levels as PD arrays for support. And then just try to see if things can bounce off of that. For those that don't know or haven't put too much study into the wick studies that ICT's talked about for literally like over 5 years, you should probably go do that because there's models you can create just off of wick retracements. I taught one of those models in my private group, but let me just plant that seed and let you guys know that wicks can also create models. But even if you don't use them as a model, you can use them as context for order flow. All right, so yeah, keep that stuff in mind. So before we go, I do want to ask if you guys have any questions. And if you guys don't have any questions, if you guys could toss in the chat, which color do you guys think is better? Do you guys like the first one, right? The teal, more teal style blue, right? Do you guys like more of like a purple indigo type of view? Do you guys like, the gray and black with a blue tint on the outside? I kind of like that one. Do you guys like the normal blue that I have? I'm just trying to think, like, how can we start the year a little bit different, right? But if you guys like the blue, then I'll probably just keep the blue. Or do you guys like the light blue? All right, do I have any other colors? Or just like bright teal instead of like normal blue? But yeah, if you guys could pick, definitely tell me which one you would pick. What other ones do I have? I used to have black background charts. I don't know. A lot of my markups or my saved templates for the markups, they're not necessarily gonna fit this. And I'm just too lazy to go in and fix everything. I got a brighter screen. But yeah. So yeah, if you guys have any opinions on that, you like the normal blue? All right. George likes the normal blue. All right, well, I'll probably just keep it normal blue then. I was just kind of messing around with stuff this morning, thinking like, what other colors would look good? Yeah, I'll probably just stick to the normal blue then. Maybe I'll go mess with the blue to make it like a unique blue color. But yeah. So yeah, with that being said, thank you guys for spending time with me. I appreciate it. Hopefully you guys got some value from today. Hopefully you guys understand all the things that we talked about. If you don't, let me know if you have any questions. I'm more than happy to help. And yeah, with that being said, if I don't see some of you guys by Christmas or on the next call or by Christmas, have a Merry Christmas. God bless you guys and you and your family. Appreciate your guys' time as always. And yeah, hopefully you guys have a good rest of your weekend, and I will catch you guys on the next video. And you're welcome, George. Appreciate you as always.